And here's another video in our business finance series. This one, we're talking about access to liquidity, but in today's topic, banking relationships. Who doesn't love your local banker, right? Well, many of us don't really think about the banking relationship. Well, in the last 5 years, many of us are actually banking with virtual banks. So there really isn't that connection, that relationship. And it's going to catch many small businesses by surprise. Now, I'm not saying like the big, large banks or the community banks are better or worse, or the virtual banks. That's not what I'm saying. I'm saying there is something special about a relationship, a person to person, somebody that, well, when things go south, or yet you didn't plan accordingly, something, a big surprise, it's great to be able to pick up the phone and call somebody you have a relationship with. We're just so used to remember the days of the travel agent? When's the last time any of us used a travel agent? I'll be honest, when I do travel to Portugal, I would love to just have a travel agent to deal with. But we don't. It's just too easy to go online and pull up that travel site. Well, in banking, it's starting to be the same thing. And I think there is going to be some sort of effect in the next softening of the economy, where we don't really have somebody that we can call because we need that immediate access to cash. And many of us, well, we don't even have lines of credit. We've been so accustomed to having a ton of cash on the balance sheet that we're not focusing about, I'm not talking about doomsday or the black swan. I'm just talking about a 15-20% contraction in your revenue. What does that do to your business? The economy is still strong. It is softening. We're not expecting a major recession, but still, when you have a 20% reduction in revenue, you only have two choices. Either you're going to make structural changes to your business that could be very painful and very hard to come out of, or you're going to dip into your banking relationship, right? And maybe you're going to float yourself through this where you don't have to make deep cuts. So there is a balance, obviously, but I believe that banking relationship now more than ever is important. This is something that even during COVID, in that first second quarter of 2020, I was talking about this. We don't have those banking relationships. It's too easy to go online when you need access to cash, pull out a credit card. Do you realize a lot of small businesses actually float their business with credit cards, 20-25% interest rates? That's not a good use of cash. That's not a good source of cash. That is a very expensive source of cash. Looking towards those banking relationships, start thinking about certain things like lines of credit. Maybe if you see this as a little bit of a structural change in your business, maybe it's not a line of credit. Maybe you should be looking at a fixed rate loan to help stabilize your costs. You can always refinance those fixed loans. So the banking relationship is important. I'm not saying you go out to your local bank and change banks, but start thinking about who at the bank, whether it's virtual or a large bank or the branch, who can you actually talk to when you really need that cash.